Hello and welcome to the Friday market update. The word of the week, finally. We have been stuck in the mud since the government shutdown with mortgage rates sitting in the dead zone for weeks. It finally feels like we are on the edge of some real movement heading into 2026. Mortgage rates came down this week and landed at 6.25%. May not sound dramatic, but we are getting close to the lows we saw in September and October earlier this year. So even more important, we are inching toward that brief moment in February of 2023, almost 3 years ago, when rates dipped to 5.99% for one single day. I definitely see a 5 handle on the horizon. Now, the best part is the economy is not going haywire right now. It's not too strong. It's not too soft. It's really in pretty good condition. Now, as I talk about every week, the Fed cares about two things: jobs and inflation. The 43-day government shutdown delayed the key reports the Fed and Wall Street rely on. So we were just on borrowed time. Those reports are finally starting to come out, and the Fed wants a solid job market and stable pricing. We already knew from private sector data that the job market was softer than expected and inflation was easing. A weak job market means less spending by the consumer, which would suggest lower interest rates from the Fed. Low inflation near 2% signals steady prices. We're seeing signs of both. This week, we saw more weak job numbers from the Bureau of Labor Statistics, the BLS, covering the past 2 months. They went out with a report for the last 2 months. The unemployment rate has now climbed from 4.1% in July earlier this year to 4.6% through November. That's a clear shift in the jobs market. It's a little bit weaker than expected. Now, we also saw the consumer price index show that core inflation, which is the most important inflation they look at, dipping to 2.6%. We're not at the Fed target of 2%, but it's creeping down. And the last time the core CPI was at 2.6% or below was back 5 years ago in March of 2021. So inflation is definitely headed in the right direction. And the numbers in early 2026 will likely look even better when the higher 2025 months fall off the calendar for inflation. So now on top of that, almost 1 year ago, this is something that I think you should really think about from a bigger perspective. 1 year ago in January 2025, mortgage rates peaked at 7.26%. So we will probably start the new year in 2026 about 1% lower than that time period. So the FHA and VA rates are already under 6%, sitting at about 5.875%. Now remember, the new year always brings us renewed energy. People want a fresh start. How do they start? They have new goals. They reassess them. And a lot of them take another serious look at home ownership. Lower rates can pull back those buyers who felt locked out at 7% plus when they were looking a year ago. They may look back and go, whoa, it's 1% lower than we were a year ago. So with prices mostly flat this year, many of those buyers may find that today's payment is lower, and now they may want to jump back in since it's the beginning of the year and they have reassessed those goals. So don't forget that the median age of a first-time home buyer is 40 years old. I talk about this all the time. These are adults with kids now starting to get gray hair who are ready to get into the game and start building that long-term wealth. So for many of them, 2026 could be the year they finally make that jump into home ownership. So my message is simple. Finally lower mortgage rates. Finally lower mortgage payments. Finally some stability in home prices. Finally a thaw in the housing mess. Finally starting a new year with some solid hope for lower rates. Finally a real opportunity for those to get into the market. It is time to take advantage of this buyer's market while the getting is good. Sellers are still covering closing costs. Sellers are still helping buyers secure lower rates. This is not going to last forever. Buyers should buy in a buyer's market, and the window is open right now. Help your buyers by not letting them wait too long. And don't let them say, I shoulda, coulda, woulda again. Send your buyers my way. Let's get them through the simple pre-approval process so they know where they stand and where they want to go. We will run the numbers to see if it makes economic sense for them to jump in now. As always, this is Gaylord out. We'll see you next week on the Friday market update. Take care. Bye.